Alright, good afternoon everyone. Thank you for dialing in our Phillip Roundtable session. Today we are honored to have three speakers from various financial institutions to join us and have a discussion on global topics, specifically on fixed income as well as equity space. Our first speaker for today is Mr. Lim Chia Wei. He's a senior portfolio manager in AHAM Asset Management, managing Asia ex-Japan equity funds. His stock and macro research coverage include Korea and US. Prior to joining AHAM Asset Management in June 2015, he was an assistant manager in Public Mutual Berhad, where he covered China stocks and Asia telecom stocks. Chia Wei graduated with a bachelor's degree in computing, majoring in software engineering from Staffordshire University, UK. He's a chartered financial analyst, CFA chartered holder. Our second speaker for today is Mr. Shawn Singh. Mr. Shawn Singh, part of Phillip's Singapore research team, is responsible for the bond analysis and research coverage on fixed income. With passion in the finance industry, his insights and perspectives are constantly showcased, featured on POEM's website, and generating market views for Phillip Bond Desk. He also conducts seminars and webinars on a regular basis to evaluate investment opportunities with particular emphasis on fixed income. He graduated with a Bachelor of Science in Banking and Finance from the University of London and holds the Credit Analyst designation. Our third speaker for today is Puan Hazlin Omar. She joined Phillip Capital Management Sdn Bhd as a fixed income portfolio manager in November 2020. She has more than 20 years of experience in both treasury and investment divisions of various financial institutions. Her main responsibilities are to assist in managing fixed income and money market portfolio for the clients. She is also responsible to carry out research activities and produce research reports on various companies, financial instruments, business sectors, and general economies for investment decision making and reporting purposes. She holds a Capital Market Services Representative license. She is graduated with a Bachelor of Science in Business and Administration Finance from Oklahoma State University, the United States of America. Right. 2020 is a unique year where both equities and bonds suffered huge losses. In 2023, we see global equities are making considerably good gains while fixed income prices have stabilized. Several economies are now shifting their perspective from predicting a recession this year to forecasting no recession. What will be the outlook for Malaysia fixed income as well as global fixed income and equities for remaining of 2023? Because this is a very broad question, perhaps we can start with Hazlin to share her perspective on the Malaysia fixed income. Over to you, Hazlin.
Okay, thank you, Kim. Good afternoon, everyone. Thank you for listening to our Phillip Roundtable today. Okay, maybe I can start with some update from on the second quarter GDP, which was announced last week. Our second quarter GDP was increased it's a small increase actually by 2.9% year on year compared to the market consensus of 3.3%, and which is lower than the first quarter of 5.6%. I think going forward, we expect the pace of economic expansion in Malaysia will likely to stay moderate due to the slowdown in global economic growth and the concern of weaker than expected export growth. Most of our local economies lower their full year GDP to around 3.4 to 4% from the previous high of 4.5%. From the Bank Negara perspective, Bank Negara recently saying that the record of slow growth going forward due to the lower end of their forecast of 4% to 5%, their forecast range for this year. So they are expecting around 4% for the full year GDP. Bank Negara also mentioned that the growth will be supported by continued improvement in the labour market, implementation of new and existing investment projects, increase in tourism activities, and from the mining sector. On the downside risks remain from the weaker than expected global growth and prolonged technology down cycle. On the upside, tourism may pick up further, and investment project may progress faster than expected. We expect the economic growth and inflation to be moderate for the rest of the year, and we believe that Bank Negara will maintain the OPR unchanged at 3% until the end of the 2023. On the local bond market supply side, we expect 50 to 60 billion new issuance from corporates and another 84 billion from the MGS DRI in the second half of the 2023. So we believe that the bond market will be well supported as our market is flush with liquidity. We believe that local bonds will stay steady despite of weaker ringgit, and but however we expect the MGS 10 years to be traded slightly higher than current level of 3.85, even though the US Treasury already increased by 40 basis points, but the MGS still steady despite the increase in US Treasuries. So it shows that the ringgit, the local bond market remains supported. Okay.
All right. Thank you so much, Hazlin, for your sharing on Malaysia's fixed income space. Shawn, would you like to share more on global income perspective, fixed income perspective?
Yeah, sure. So as rates are expected to reach its peak alongside the dovish sensing from the FOMC members, indicating that their policy has somewhat gotten to where they wanted it to be. So I mean, this definitely instills more certainty that the rates would not be as volatile as what they have experienced in the previous years, where it seems like there's no ending to the climbing of the rates. So I mean, with rates starting to stabilize in the later half of this year, we would be hoping to expect much more volumes of newer bond issuance to arise in the later half of this year, perhaps in Singapore in the space. So for our clients, our view for the second half of the year is to accumulate new issuance, preferably issuances with investment grades and with sound financial and capital management. So this will enable investors to capture the potential capital appreciation and lock in the decent rates for the following years to come when rate starts to taper in the later half of the following year subsequent.
So we have covered global fixed income. What about equities? Over to you, Chia.
Yeah, thanks, Kim. To talk about global equity, we will separate it into, let's say, the developed market, the US, Europe. Then we'll touch on the Asian equity market. In the case of the US and European stock market, the two key things that are in everybody's mind is one is really the risk of recession, and two is inflation. And related to the second one, inflation, is really the bond yield, what bond yield is doing. Recession, to start off with recession, I must admit first that I got it wrong. I thought US recession would play out sometime in